Hi, welcome to this Sphere Day, which is on the 3rd of August. It's Monday. Just going to be looking at the Aussie dollar today. Now, in terms of the Australian dollar, look at it against three other currencies. We'll be looking at it against the USD, also the JPY, and finally the euro. We'll go to the charts in a moment. Now, we think the Aussie dollar could be on the verge of a reversal to the downside. Upside is limited from here. Too many speculators long. We're expecting a breakdown. And tomorrow we do have a high impact news event, which is the meeting of the central bank, the RBA. Now, in relation to the Aussie dollar, it looks a good risk to reward short in our view in all three pairs. So let's go and take a look at the charts. But just before we do so, keep in mind it is my view. As of this moment in time, it can change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, just click on the link beneath this video. You'll get live access to our member center. You can also take a look at our Facebook page, and if you wish, join our Facebook group of traders. Right, first pair we'll look at will be AUDUSD. Right, AUDUSD, you can see the technical picture. Looks like a nice big bullish long-term trend, which it is, up 20% plus from the lows, but it's going to retrace a good percentage of the rise, and the warning sign is coming from the fundamentals and sentiment. Now, come to the RBA in a moment, but the AUD has generally found support from strong commodity prices. Iron ore up well over 20% this year. That's Australia's biggest export. Copper, another big export. Really being bullish to the upside. You can look at any of the commodities Australia exports. Gold recently hit a record high. Crude oil has been fairly firm. Zinc, etc., etc. However, in terms of commodities, there's signs that we are now at a bullish extreme and going to lose momentum. Speculators heavily long. They push prices way too far against the fundamentals. We expect commodities to break down. Speculators get hit on stop, and that will weigh on the Aussie. The AUD is up on traders' bullish view on China and the global economy. There is a lot of data out of China that looks good, but we know that a lot of Chinese data is manipulated. They are not doing as well as most investors think. China's a export-led nation. Where are the export markets? They're just not there at the moment. They've shrunk. China is not going to do well going forward. Global economy, a lot of optimism about a V-shaped recovery. The facts don't point to that at all. So I think, we're as good as we're going to get in terms of view of China and the global economy. Now let's have a look at the RBA. Rates expected to be held at 0.25%. Okay. And I think they will hold rates, but the market is not looking at a rate cut going forward. But keep in mind what Governor Philip Lowe said last month, that there was scope to move rates to just 0.1%, and the picture has darkened since last month. So there are good reasons to cut. I don't expect the cut to come tomorrow. If it did, I'd be very happy, but they could point to possible cut coming, and I don't think the market is prepared for that. So why would they cut? Obviously, the COVID-19 virus emergence in Australia again, particularly in Victoria State. Okay, it's extremely serious. The market also bought the Aussie on the view that Australia just contained the virus. It's back with a vengeance. Okay, and I think it could get worse. That can weigh on the Aussie, and weigh on the RBA's view going forward. The inflation rate is the biggest quarterly drop we've just seen reported in Australia since 1931. So that might persuade them to cut rates. Also, they've got the weakest job market since 1991. When you look at Aussie, unemployment is a bit deceptive, because there's a lot of people who are on government support, which are not counted in the figure. So you've got a very weak job market, and obviously you've got property markets that are a problem. Sydney and Melbourne both taken hits. RBA might want to give mortgage holders some relief. Okay, on the other side, USD oversold. Last month was its worst month in a decade. The bad news we think is discounted for the USD. We had the Fed last week, and yeah, people expected them to be very dovish. They were. Also, the market expects that the US economy will not do as well as Australia going forward. That's just ridiculous because the US has got a big internal market. Australia is export led. So, yeah, the bad news is just basically in for the USD. And the smart money has started buying. If we look at the COT net traders report, smart money was heavily long the Aussie back here. But as we came up after this reversal, they sold out of their long positions. Speculators have come in to buy. They were short in this big rise up here. And if we look at the chart, we've got two red candles. And today, stock's pretty firm. You know, hit a new near-term high, yet the Aussie is red. Aussie is fairly correlated with the S&P. Okay, and that correlation might be breaking down. For us, Aussie bullish extreme. And obviously, when we correct here, this is a fairly laboured rise. We break up here above these highs, trundle up a bit, and you got like a triple top there in my view. And I'm looking for that level to hold the rally, just draw trajectory. So I think you've got resistance, obviously, well, not obviously, you've got resistance at today's high, then big resistance here. If we were to go up after the RBA, you know, and you did break out to the upside, then you could perhaps look to sell a failed breakout, okay? In terms of a breakdown, where would be a good place to sell the Aussie? Well, the previous breakout there, and you can see, let me just get my line straight. Sorry, there we go. You can see kind of quadruple top there. You did get a slight poke through, but then reversed back. Sorry, let me just get rid of that line there. Reverse back, come up, break out, laboured rise down. Now I think if we break below this level, we should see a decent move to the downside. In terms of a decent move, what I'd be looking for is a move to the key support level at 65. So potential 500 pip decline. So basically you come in below the support. It's good support there. So if it does break, I think the odds of follow through are good. If we went up back towards the highs or through them, you could look to sell any topping action. But I think, you know, tomorrow the RBA could be pretty cautious. They could hint at a possible rate cut coming. And that would be enough, I think, to break the Aussie lower. Right, let's move on to our next pair, which is going to be AUDJPY. Right, AUDJPY. Now, in terms of the Aussie fundamentals, we've just gone through them. I just want to quickly go through the yen fundamentals. It is the most oversold major currency of all. And I think, yeah, going forward, it will be supported by its current account surplus. It's a creditor nation. So I think it's getting ready to push to the upside and push, obviously, the Aussie down. And yeah, if we do get risk off, which we've not had in the markets, that will give the yen an additional boost as well. Now, in terms of the Aussie dollar, you get a big rally up here, okay? Then we correct down. And then look at the price action. We come back up to test this double top over here. And the double top holds, okay? Come down, 1, 2, 3, 4, 5, 6 very small candles, okay? I think if we rally back up to here, yeah, the highs will hold. You could look for topping action off the level, or if it went through the level, broke out above resistance, you could look to sell a failed breakout. But if we look here, these candles are all really sitting around a round number, which is 75. Sorry. Okay, so we've got a round number here. You can see this is the previous level where we broke out and had a go at the highs. Come back, now we're trying to find support or finding support at the level. So you just want to go through 74.80. Now the low volatility, you can see it, the Bollinger Bands have tightened up. It warns of a big move for us. We think the buying is exhausted. And through 74.80, we should see a meaningful decline. And I think, first level you'd be looking at would be the 70 level. Okay. So basically 500 pips on the downside. I think longer term, we could go even lower. I think we could go all the way back. Sorry, not there. Gone to the wrong level. Meant to go there. The 65 level. That's my longer term view. I think, just to correct the bullish extreme, it's 70. Good risk to reward on this pair. It's well over 4-1, and it just looks like we're getting ready to break down. And the bullish or the bull trend is exhausting. I really like the look of this pair. Right, let's have a look at our last pair, which is going to be Euro AUD. Right, Euro AUD, and basically we've been in a fairly tight range in recent months. You see the volatility really tighten up here, just travelling sideways. But Euro showing a little bit of strength. We're coming to the top of a range. In terms of my levels of entry, stop, and target, just draw them in a moment. Just quickly in terms of fundamentals and sentiment, I think, Aussie just generally overbought on just about on every other major. I think, the euro will be supported by its current account. Eurozone, it's a creditor nation bloc, just like Japan. Okay, so money always flowing into it, and I think risk off will give it an additional boost. And I quite like the technicals, because I like low to high volatility. And volatility is low, that warrants for a big move. Euro getting a bit of strength. I think it'll continue. So let me just draw some levels. Now, in terms of this drop down here on that red, we reverse on the blue, then we work our way higher. Now, I think if you're coming in to this pair, your stop would want to be behind there, which also lines up with the green line, which is a 20-day moving average, which if we break higher, we would expect that to act as support. So this level, 162.70, got trajectory there, just to show higher lows. And I think, we'll find support at today's low. Okay, you've got a candle, it's obviously very small, and the previous very small, low volatility, looking for it to change to high volatility and to take out these candle tails over here, particularly this red, the middle red, or the middle of the three candles. See, we're just resting below the level. In terms of entry, it'd be 165.80. Okay, now what you're looking for is this to go to high volatility and follow through to the upside. You could then bring your stop up maybe behind this trajectory. Initially keep it behind this level here. Where could we go to? Just go up towards the 171 level. Obviously you manage the trade as it goes, but another good risk to reward trade. Aussies overbought everywhere. You might have your favourite trade setup of these three. If you just fancy the Aussie to go down generally, you could do all three and treat it as one trade. I think the Aussie due to fall, hopefully, and I'm hoping it's going to be tomorrow after the RBA.